Hello everyone. Good morning to one and all. So today we're going to discuss the topic that has been left yesterday. So before getting into the topic, I just want to motivate you guys with a word. Never stop doing your best just because that someone is not giving you the credit for it. So people who have your talent, skills, do your best, give your best. It doesn't matter whether you get the credit for it or not, but one day definitely you will have this, you will be recognized by some means and you will be honored for that. So as you see on the screen, today we're going to discuss about the topics that is called share market. So I know most of you people know about share market, because share market is just nothing but the investment in joint stock companies. Because if you take a share market, the whole country, the whole world is right now is running on the share market, because so many business people are investing their monies on the share market because they can gain more out of it. For example, if you take a company name called HCL, the HCL will be having shares in the share market. So if suppose I want to buy a share, so I have to go and there is some websites are there, so you can go and you can buy the shares out of it, and you have to invest some money in that, and you will be investing your shares in that particular company, and you will be keenly watching it day and night, so that suppose if that share goes high, you can get the money. If the share goes down, you are losing the money. So that's called the share market, and it is also called a stock market or equity market. Trading of shares. Basically, share market is nothing but trading of shares, purchase and sell. So basically, you will be purchasing, you will be buying the shares and you will be selling to someone else. You will be buying a share for 30 rupees and you will be selling it for 60 rupees. So basically, you get 30 rupees profit out of it. So this is called the share market. In India, we have this Bombay Stock Exchange and Pune Stock Exchange and Jaipur Stock Exchange, etc. So next one is budgets and accounts. So as we are discussing about the financial management, so budget and account plays a major role in an organization. If you take any organization, budget plays a major role and accounts also plays a major role, because they are the one who will be handling all the budgets, whatever the income they get and whatever the expenditures they are going to do it for the company, everything will be monitored. So budget, financial plan for next year, instruments for planning future activities related to finance, statements which tells the future inflow of and outflow of money in upcoming year. So basically, this budget is nothing but the organization will be planning a budget for the upcoming year. For example, if we take industry, if suppose it's a car industry, they'll be doing the manufacturing of cars. So basically what they will do for every financial year, in the sense they will be allocating some money for the next year, because they will be calculating the sales as well as the expense that they do for the organization. They will be calculating each and everything, the income, the outcome, everything they will calculate, and they will be doing it. They will be allocating a budget for the financial year. Because if suppose they make a budget, that would be very helpful, because when they move to the next year, they can easily plan accordingly, because they don't need to spend unnecessary money in unnecessary things. So in order to avoid that, in order to cut those unworthy expenses, they will be planning for the budget. So that is called as budget, and this is called budgetary control. When budgets are used as a tool for planning and controlling the capital, is called a budgetary control. Basically, as I said, in capital, the whole amount for the particular enterprise is called as capital. So for example, 5 lakhs is a capital investment for a small shop. So how they plan accordingly, because if they are spending more than 5 lakhs, for example, when the budget are used as a tool for planning and controlling the capital, so that means they should not exceed the capital amount. Because if I'm investing 5 lakhs in a capital, month on month I cannot exceed 7 lakhs like that. There is no use, because I already have a capital, so I should do the budget within the capital. If I exceed that, it will be a loss for me. So that is called the budgetary control. The next one is types of budget. The first one that we're going to see is production budget. So production budget is based upon the sales budget. Sales budget tells that what quantity is to be produced, hence gives the output required per month. Hence production budget is prepared to meet the sales budget, contains quantity to be produced month wise or quarterly wise. Production budget is nothing but, if suppose I am manufacturing a flask, okay, if I'm manufacturing a flask, or if I'm manufacturing a box like this, okay, a small box like this. If suppose I'm manufacturing it in month, if I manufacture 1,000, so I will be calculating the budget. In which way I will be calculating, the sense what will be the amount to buy, what will be the amount that I will be spending to make this mold. So that is one budget. Second one is design. Third one is the labeling. Fourth one is the content inside the box. So every organization, they will be planning accordingly for the production base, because they cannot exceed the production, because they always see the sales. Based on the sales only, all the companies, all the organizations and all the managements, they will plan the production budget. If suppose they are not getting a good sales, if they are spending more money on production, that will be a major loss for the company. So each and every organization, the deciding authority, they will be seeing the sales. That means sales in the sense, that's the income that they get for the organization, and they will see the income and they will go for the production, because production will be the outgoing and the sales will be the incoming. The next type, this is some example. This is the production budget, how the company will do this. Full, you can see it on the screen. Next one would be the sales budget. So what is sales budget? Provides projection about sales of product in the upcoming year. So sales budget, for example, if you take a banking sector, if I want to give an example, if you take a banking sector, we would know about the credit cards, right? So this is called a sales budget. How in the sense, the particular executive will be given a task. I mean, he will be given a particular a sales target. He has to sell 150 credit cards per month. So this sales executive, what he will do is, he will go place and he will try to sell the credit card. So that is called the sales budget. So same thing, this sales budget also comes. So the company, the organization, how they plan to sell the product. So they will be having an estimation. Okay, the next year we will sell around 5 lakh bottles, or 5 lakh bikes we will sell. So that is called the sales budget. So they will calculate the budget based on the sales. So we will make a 5 lakhs of sales, and we will production will be of 2 lakhs, so it will be a profit. So likewise they will do the calculation for the sales budget. Also provides information about income of company. So this is nothing but the income that they get out of the sales. So sales budget is nothing but the income. Third one would be the market competition, sales forecasting, or the important input. So they will be seeing the market competition, because if suppose I'm manufacturing a particular product, the same neighboring company also manufactures the same product. So it would be a big challenge for this company to sell their product, because already someone is also doing the same work that this guy is doing. So if suppose the price range is very less comparatively, so most of the people will go for that company only. They will not go and get the product from this company. So it will be a big loss for this company. So they will be seeing the market competitions. So whenever we do the sales budgets, we will be checking all the competitions and the forecasting, everything we will do. We will check it, then only we will go and we will do the budget. So this is basically prepared by the marketing manager, because he knows what the income they get and what the outcome, what the expenses they're doing it. So this will decide the requirement of advertisement, workforce required, final targets, rate of advertisement. So basically that, as I said, this is income. So there will be people will be targeting on the advertisement. Even if you see the news channels, you'll be getting so much of advertisements. Why? In the sense, because they need to sell the product. So for that only, they're putting so much of advertisements in the channels, and requirement for advertisement. So what would be the requirement, what would be the features of the particular product, and what would be the workforce required, like how many employees are required for this particular task to be completed, so the manpower basically. So these things also will be coming under the sales budget. So this is an example of the sales budget. You can see it on the screen. Next, steps in preparing the sales budget. So this is how the sales budget, they will be preparing it. You can see it on the screen. So next one is cash budget. Cash budget is nothing but the projects, the cash inflow and outflow for a particular time period. So this is nothing but it projects the cash inflow and outflow. As I said, the petty cash rate. So if you take a company, the company will be having some petty cash with them, because they cannot go and buy small things. They cannot go and they cannot make a budget and get the approval from the marketing manager or from the higher heads for a small product. So basically they will be keeping the petty cash, because every time they go and get the product, they get the bill and they submit it to the account. So that's what the cash budgets. So they will be calculating, because every money they cannot keep it in the account. So some money they have to keep it in the cash as well, right? Because small companies, for example, if a provisional stores means you cannot keep all the money on the account. So you will be having some cash, because the customers will be coming in, walking into the store, they'll be buying some provisions, groceries, something like that, and they want to change, you have to give, right? So the cash inflow and outflow. So they will also do the cash budget, the management. So manage the working capital effectively includes receipt, cash collection. As I said, cash collection is very important, receipt is very important, disbursement is very important, cash reflex is very important, and financing. Next one is labor budget. So this is labor budget, called as direct labor, employee who actually works on machine and produce goods. So labor budget also plays a major role, because a company cannot just like that run without a manpower. So if there is a company, definitely the company has to run with the manpower. So they cannot just like that, they can run the company. So they have to hire the employees, and they have to pay the salary for the employees, right? So that's the labor budget. So some people will be working under the direct laborers, and some will be the indirect labor. That's called the employee who works indirectly, helps in production of goods. So some people, if you take manufacturing industries, for example, if you take Hyundai company, Hyundai will not manufacture the whole car. They will be doing the assembling part. The other parts that they get for the car will be coming from different places. So they are called as indirect labors. This is the labor budget. Next one is master budget. This is very important. Master budget is nothing but whatever the budget that we see earlier will be comprised in this master budget, summarized budget of entire enterprise. So whatever is there, whatever it could be of anything, whatever we buy, whatever we sell, whatever we do the budgets, labor budget, everything will be coming under the master budget. So summarized budget of entire enterprise ensures coordination among departments. So they will be coordinating among different departments, and they will be gathering the budgets, and they will be comprising it as a master budget, so that when they submit it to the director or CEO, they can easily have a clear view of the master budget, what exactly happens inside the company, what is the profit that they get, and what is the expense they're making. So effective control over the business. So they will have an effective control over the whole business. So here they mentioned it, how to calculate the profit. Profit is nothing but total income minus total expense. So what the income that you get and what the amount that you spend, so that will gives you the profit. So this is nothing but the master budget plan. So you can easily see this flow chart. So master budget includes all the budget, cash budget, miscellaneous, administration, everything will be comprised in the master budget. So next we are going to see about the profit and loss account. So in this you can easily see that financial document that shows how much profit was made during the last financial year reflects the earning capacity and the potential of the firm. Summary of revenues, expenses and net income of firm serves as measure of firm profitability. So basically if there is an organization, basically the organization will be going and will be seeing the profit, and they'll be calculating the loss as well, as because if there is no profit in organization, there is no use of running the organization. So every organization is running is because for the profit's sake. So financial document that shows the how. So basically if you have everything documented, so they can easily go ahead and calculate what was the profit that they get. So that's the what was the income they got and what was the expenses they made. So that can be given a clear view on how the profit and loss for the accounts. This is a example for the profits and loss account for the year. Forms of profit and loss account. Step form records the revenues first and then the expenses. Statement divided into vertical parts. Total expenses subtracted from total revenue to get net income profit, RHS revenues. So this is the form of profit and loss. As I said, to calculate the total expenses is nothing but subtract from the total revenue that you get. So that will make sure that you will get you can calculate the profit. And this is for the balance sheet. So basically the balance sheet is nothing but at the end of the financial year they will be making this balance sheet so that they will know what are the amounts that they left in their account. Provides the snapshot of the firm at the instant, shows different areas in which money belongs to the organization. So whatever the money that is belonging to the organization, that can be easily found out when they do the balance year. So done on the last day of the financial year, consider the profit and loss account. So they will be calculating, they will be checking the balance sheet, they will be basically checking the profit and the loss accounts. Types of balance sheets: account type and report type. Sheet divided into two vertical parts. So this is the balance sheet, you can see it here. You can see the examples. So basically it will be telling that what are the advances, whatever the things that happened, the liability, that amounts that they spended, and what are the assets they bought. Everything will be mentioned here in the balance sheets. I mean in the types of balance sheets. Important terminologies. Journal is used in accounting for keeping the record either debit or credit. So journal is nothing but the accounts for keeping the everything in the record. Ledger is nothing but the main file that records the monetary transaction. So basically whatever the expenditures has happening inside the organization, they will be having a ledger to maintain that. And liability, someone who will be responsible for something. So for example, if I am responsible for the particular area property, so I will be given the full liability. So I will be taking care of the whole properties, and I will be maintaining it. Whatever the problem that organization face with the property, they will be asking the question simply to me, because I am liable to the particular properties, the assets. So there is nothing but the ownership which can be converted to cashes, types, tangible and intangible. And this is called taxes. Tax is nothing but the collection of tax comes under the revenue budget of the government. So basically we all know that there is two types of taxes: direct tax and indirect tax. Direct tax is nothing but that we pay directly. For example, income tax is called as direct tax. And indirect tax is nothing but, for example, when we buy a toothpaste or when we buy anything from the stores, we get a tax rate. So nowadays we call GST like that. So that's called the indirect taxes. So with this unit is getting completed. I hope you guys understand the video, and if there is any query you can contact me. And I hope you are doing good. I know that you guys are studying nicely. Keep up the spirit and just concentrate on studies, because anytime the college could be opening. So I wish you one and all for the successful future, and please stay safe, because nowadays this COVID-19 is spreading like anything, and we can see the news itself that so many people have been infected, and they're really suffering. Let's pray God for them to be recovered very soon, and I hope you guys to see soon. It's bye from Vimal. Thank you and all the best.